Welcome back to Bother Dogs Finance. It's again the time for our weekly pick under FSS model. This week we are going to take a look at the Russell 1000 and see what are the most attractive recommendations under this model. For those guys who are not familiar with FSS, it stands for Factor Scoring System, where the system gives a score ranging from 0, which stands for the least attractive, to 100, the most attractive for every single company under the universe, such as SP 500, Russell 1000, Russell 2000. And these are the ones we picked this week from the Russell 1000 universe: the Marathon Petroleum, the Ferguson Group, Reliance Steel, the HCA Healthcare, and the Pot Group. For the details, let's use our FSS model spreadsheet. A quick reminder that the FSS model spreadsheet can be accessed via the URL link I pasted below the video, so feel free to check it out. Going back to the spreadsheet, the total score column here is the one that we talked about that measures the attractiveness of the stock. And we cover different universes: the SPY, SP 500, the NASDAQ 100 QQQ. Russell 1000 is IWB, and the last one, IWM, stands for the Russell 2000. Well, today we are going to focus on this IWB, the Russell 1000 universe. So the first five names we highlighted, they are with total score above 80. Whereas this total score looks at different aspects of the company, including relative valuation, business quality, the growth potential, price momentum, and price daily volatility, and aggregate them to the total score level. So that is how we derive the total score here. Why, of course, why this name with good total score? Because they have decent scores from every single aspect of the company. And let's look into them one by one. First is the relative valuation score. For the exact valuation matrix, you can scroll to the right in the spreadsheet and you can just find them here. Valuation matrix including like earnings yield, book yield, sales divided by price, free cash flow yield, and etc. One of the most important valuation matrix we're looking here is the earnings yield. Well, for these five companies, their earnings yield have average of like 12%, where the earnings yield is measured during the past 12 months versus the overall Russell 1000 index. It only has earning yield of 4%, meaning the five names are look very attractive. They have better earnings or high earnings compared to the price that they are currently trading. So they look undervalued, and it's a good opportunity to buy into them right now. Another matrix that we generally look at is the free cash flow yield, the free cash flow divided by price. We look into this ratio because from our historical testing results, we found out that the ratio is very powerful in predicting the stock returns in the future. So these five names have free cash flow yield of 11%, again versus the whole universe of only 4%. So another reason for us to hold them. EV divided by EBITDA, also indicating the Russell 1000 have average of 22 versus these five names average of only 8. So these names are really undervalued here. While other metrics such as operating cash flow yield, the sales divided by price, you can also look into them as they provide more information about the relative valuation side on these companies. While for the quality scores, they also look pretty high because one of the most important quality indicator we emphasize is the asset turnover. This directly measures how efficient the company is running their business. The average of these five companies stands at 150% versus the overall universe of only 66%. So these companies have much higher turnover compared to others. That is also why the quality of their business looks decent compared to others. Return on equity, return on assets, and return on invested capital of these companies also look high compared to the average of the universe. That is another reason why we think their business are more robust compared to their peer groups. Then the growth potential score here, we are not going to dig very deep into this score because this score has relatively lower weight when contribute to the total score because based on our historical study, we know that compared to the value and quality, growth score is not as important as what the valuation or the quality will do there. The last two indicators are the momentum and the low volatility scores. These two are the ones that mainly help us to pick the right stocks that fit our investment style better. For example, and the low volatility score here tells you that what are the level of the daily return volatility of these stock look like. For example, if a stock with relatively high low volatility score, that means daily return of the stock tend to be less volatile compared to others, meaning that if you invest in those stocks in the long term, it is going to deliver stable returns compared to others. It's not going to show you huge swings on either good days or bad days, however, and instead it's going to show a steady investment pattern. While for those ones with low volatility score, that means the stock can post huge daily positive or negative returns. So if you are an investor that is not prepared for this, it's better to look for a stock with high low volatility score here. And that is a quick look on the Russell 1000 for the next week. Hope you find the FSS model helpful and I will see you next time.